Hey guys, today is Monday the 5th of September and I'm recording this video from Vietnam. So if you don't know already, I've been overseas for about a week. But even before that, I haven't been doing any of these videos for about 4 or 5 weeks or so, but just been really busy with a lot of different things and really couldn't fit in the time and didn't have time to really think about what I was going to talk about. But I thought I should get one out anyway. Because before I had a consistent routine. And a few people have been quite satisfied with some of the content. So it's only right that I kind of keep doing it. So like I said, recording this for Vietnam. So we're about 3 hours behind you, behind Melbourne. So it's currently 12 p.m. now. But I really want to just focus on just the ASX 200, which is the Australian stock market index of 200 largest companies. If you've got time, we'll talk a little bit about the Aussie dollar because there's quite a lot of things happening in the market at the moment. Whether you're aware of it or not, but we're heading into a really volatile time, right? So September and October, historically have been really bearish months. That's certainly going to continue. The question is going to be, well, how much of a correction we're going to see because, market is really overextended, right? And, there are signs that the stock market could keep going up, but you've got to remember that, the stock market is an illusion, okay? It's not really a real measure of the economy, okay? So, and a lot of people seem to, struggle to understand that, but, I won't get into it too much. I really want to start getting into the charts, kind of look at the ASX 200 and what I'm seeing, because there are some day trading opportunities, right? And there are some swing trading opportunities if you're looking for that. So let's get started. So just looking at this chart here, we'll look at the weekly chart, okay? Now what I've marked in here is just some support resistance levels, all right? Some minor and major ones. The black ones I'll talk a little bit about later, but they're the really important ones that I'm really keeping an eye on. But we won't see much action for that until now. So just go down to daily and I'll show you what I'm looking at. So if I can get that, there we go. So without getting into specific details on every single move, what I'm going to show you is what I think is likely to happen, okay? Now, I did post an update about a few weeks ago, and I said that there was a level that I was looking at, which was the 5768 level, I think, from memory, I think. And I said that if it gets to and around there, right, probably I think it was about there, and we do test that level, we could see a bit of a correction from there. We could see about 1,500 point drop. Now, we're not there yet, but, it's not off the radar yet, right? Now, there is the possibility that we might see a move earlier than that, okay? And I'll show you what I mean, okay? So you can see here the market, right? It's done, I won't get into this, right? We've been in an uptrend the whole time, right? All here. Now we came down, we broke structure, right? We came back up, retested, and then we've done this kind of, stair-step move, right? But it's not until we reach this level that we've basically put in a signal that says we've got a trend change, right? So the market's come up, it's closed above these two levels, right? So now we've got a signal that says we might be seeing some more bullish behavior to the upside, okay? Now, but that's based on the technicals, all right? So there's a couple of things you want to look at now. So the first thing is, if this really is a genuine bullish move, right? How do I look to get in? If you're looking to get involved to the long side, how do you get involved, right? Now, obviously, we want to look for a retracement, right? We want to look for the market to kind of pull back into one of these support levels here, right? And we look for an entry to get long, right? Now, a couple of things I want to mention on that, which is the first thing is, this is one of the times in the market where you have to make some exceptions, okay? The technicals tell you one thing, but on the other hand, right, you got to look at the current market dynamics, right? we're in a very volatile period, right? We're heading into these critical months. We know that the central bankers, have all sorts of games up their sleeves, right? And we know that, the market likes to surprise, okay? When you think the market's going to go in a certain direction, it tends to, out of nowhere, just, reverse it, okay? So that's the first thing. So you've got to be careful, even if there is a good long entry, you get right on the dot, you've got to be careful with your position sizing, how you're managing your stops and how you're managing the trade, okay? So that's the first thing, right? And the second question that kind of leads up to is a generic question, which is whether you're a trader or you're an investor or a gambler, whatever the case may be, right? Whenever you look to get involved into the market, right, it doesn't matter when, doesn't matter what it is, where it is, right? You need to really ask yourself two questions, right? Two simple questions. Right? So the first question is, at the level that I'm looking to enter, right, is there a high probability that the market will go up or down from there? Okay, so pretty simple. All you need to do is determine if it's going to go up in your favor to hit your targets, or if it's not, right? And when you get in, there's always going to be fluctuations, right? So I'm not talking about that. I'm just talking about the trade itself, right? So that's the first question. You want to ask yourself, is the market likely to go up or down, right? Because if you're 100% confident, then yeah, obviously go in, right? But if you're only 80% confident, then is that enough for you to get into the trade? Okay. Once you've established that, the second question you need to ask yourself is, okay, so at the level I'm looking to enter, what is the risk to reward? Okay. The risk to reward is basically how much are you going to put on the table, how much are you willing to risk, right? In order to gain how much, right? The sensible approach is 1-to-1, right? So if you want to make $50. If you're risking $50, you want to make at least 50, right? You never really want to risk 50 to make 25. It just doesn't make any sense, right? Because in the long run, you're actually going to be losing all the time, okay? So that's the second question you need to answer yourself. So if you can answer those two questions, then you've got a good trade, right? And it's not always going to go in your favor, of course, but if you stick to that particular setup or strategy, then you should always be in a profitable position, okay? So just kind of an example of that, right? What I wanted to show you is let's use this one as an example, right? We're looking for an entry, right? Now let's just say that you've determined that this level here, right here, is going to be the ideal level to enter, right? Not saying whether it is or it isn't, I'm just using the example, okay? So the first question you want to ask is the market likely to go up or down from here, right? Now, I'm looking at this, and from my own experience, I think it's going to keep going down, right? So, but let's just assume that you think that it's going to go up, right, from here, right? And you're looking at targets, say, up here, right? So let's say you've answered that question. The next question will be, what is your risk to reward, okay? So this is where it's quite important, this question here. So in terms of the reward, right, if you're looking at targets to be at this structure level here, you're looking at, say, this much reward, okay? Let's just assume that's, I don't know, $10 reward, right? Now, what's your risk going to be? Your risk has to be at least 10, right? I mean, it has to be no more than 10 because you're trying to gain 10, right? So you really want to be at least 1-to-1. So if you're looking at that, then you put your risk here, right? That's your risk, right? That means that your stops would have to go somewhere around here, right? Now, I can tell you right now that is a bad trade, okay? Because firstly, right, your stops need to really go. Your stops can't just be random. They need to be positioned at specific levels, right? Now you can't really put stops there, right? Because there is a high chance that it's going to get hit. You can put it down there, right? But that's just kind of an extension of this area here. But I wouldn't put it there too. It's not really strong enough kind of level of support that you really want to put it where it's kind of safe, right? So the safest place to put it is really here, right? But if you put it down there, you're risking way too much. You're risking this much, right? In order to gain that much, which is almost 2.5, right? So that's why it's important to kind of ask those two questions, right? But if those two questions can't be answered with confidence, then you haven't got a trade, right? You should really stay out and wait, right? So, and if you really, and then if you really want to get into that trade here, just say you really have itchy fingers, right? You've got to really contain yourself and say, well, I'm going to contain myself and I'm going to wait for the market to come down further if I want to look for an entry, right? Right? Because if you wait for the market, say your targets here, those are your risks, that's your reward, right? And this was your risk, right? Right, let's just use an example there. And we'll say, right? Okay. So if you really want to play this the more sensible, it's the smarter way, right? What you can do is you can say, well, I'm not going to get involved in this market unless the market trades further down, right? I want to look for the best possible entry level where I can get the highest reward with the least risk, right? So let's just assume that we're going to look for an entry down here, right? So if we look for an entry down here, the market moves down, right? This is how much you're going to be, your stops will still be there, right? Right? Because that's really the next main structure level. Right, so your risk is going to be reduced from that to that, right? Whereas your reward, right, is going to be, right, and let's assume that you're going to still hunt for these targets, right? Your reward is going to be about that much, right? So you've already tripled your risk, right? But let's just assume that you decide to take targets, say at the next main structure level, which would be about here, right? Then you've already got just over a 1-to-1 risk reward. Right, so that's the smarter approach that you should be taking. So I just wanted to highlight that because it's something that I make these mistakes as well. So and these videos help remind me of when I do these videos and kind of explain to you these things. Like it's not to show you; it's to show myself because it's kind of like a gentle reminder, that if I'm showing you something, I have to kind of live up to it. So. It helps ground me too. So that's that there, right? Now, I think 12 minutes. So we'll just go 2 more minutes. Now, just want to quickly talk about the ASX 200, right? So we're heading into this level here. So the market's kind of broken below structure here. What I think is going to happen is we're going to see a correction back up, right? To retest this level here, this 5499 level, right? What I think will happen is if we do reach that level, we might see a reversal back down. Now, the reversal might come down to, initially it would come down to the 5264 level, which is marked as an important level. Just by the way also is that these numbers aren't random. I didn't pick them out of the box, hat. These are specific numbers I've calculated. But, this is the first level we're going to likely see some short-term support, right? If the market does fall below that, we're looking at the next support level being the 5164 level, right? Now, this is going to be probably light support, right? Low support. But what I really want to highlight to you is these levels here, these two levels, 5053, right, firstly, and then 4896, right? If the market breaks below these levels, this level first, right, and then just this level first, right, and we get a close below on the daily, right, we're going to be looking at, we might be in trouble, all right? We might see some trouble ahead. 4896 is going to be probably a level that's going to be a make or break, okay? So if the market does trade, strongly on the bearish side below this level, or strong, a very bearish close, we're going to probably see a bit of a move to downside. That's where we're going to be careful, right? So if you look at the whole bigger scheme of things, right, like if we break that 4896, we've got all this room here where the market could fall down to because there's not really much support, right? So that's the scary thing about this, right? Now, I could be wrong. We could trade up and then we could break up to the upside and hit this level here that I identified as being the top, right? Now, I could be wrong, of course, but it's something just to keep an eye on. There are day trading opportunities in here that on the lower time frames that you can utilize, right? You guys got to understand that, market it's not random, like I said, right? And everything's based on patterns and mathematics, right? If you look at the market enough, you'll start to notice that, the moves are repetitive, right? It doesn't matter whether it's the 5 minute, the 1 minute, the 1 hour, or the daily, right? The moves are repetitive, right? It's just a matter of just identifying those patterns, right? And then building a strategy around that, and you'll find that you will likely be, if you're disciplined enough to follow your rules, don't let emotions get the better of you. You're always going to be, at least a 50. You're always going to be in a profitable position, right? So I think I'll talk more about that next time. But yeah, I think there's a lot of opportunities in the market now. It's going to require just taking, just devoting a bit of time just to, understand the markets a little bit. Don't listen too much into the mainstream media, right? A lot of this stuff is just distorted. There's a lot of people, a lot more better experts out there that are really giving genuine information. So I'd be really careful of listening to anything into mainstream, and then using that as as part of your investment decisions, right, moving forward. So yeah. Anyways, I'll leave it at that. 15 minutes, 16 minutes is enough. So any questions? Let me know. All the best. I'll talk to you guys soon. Cheers.